And then let's consider the key terms that we will use as terms of transactions in preparing the trading profit and loss account. The first one is opening stock. Opening stock is the value of items or goods in a warehouse. The value of items or goods in a warehouse or a store at the beginning of an accounting period. You know, at every business we want to know the stock of goods that they use to start up business at the beginning of a business. It is important because at the end of the trading period, they will also want to know the stock of goods left in the store at the end of a trading period. Then we'll consider the second term, which is purchases. Purchases are the goods bought by a business for resale during an accounting period. You know, when preparing an account, you may see raw transactions like bought goods for 1,000 naira. Now, in interpretation in business studies or in accounting, we interpret buying or goods bought to be called purchases. So when preparing the account, when you have transactions of good bought, you interpret it as purchases when preparing the account, not bought. Then you write the figure of the amount, but you interpret it as purchases. So there are purchases, that is purchases, they are the goods bought by business for resale during an accounting period. Then we have another term, which is cost of goods available for sale. Cost of goods available for sale. Now, cost of goods available for sale is the addition of both opening stock and purchases. So when preparing the account, we have opening stock stated, and then we add our purchases. Whatever we get as the total figure becomes our cost of goods available for sale. Then the next term is closing stock. Closing stock is the value of goods in a store or warehouse at the end of an accounting period. The stock of goods kept in the store or warehouse at the end of an accounting period is what we refer to as closing stock. Now, so when you are now trying to get your closing stock, you simply add your opening stock plus purchases, then you get your solution, and which we refer to as cost of goods available for sale. Then you also subtract your closing stock to get your cost of goods sold. Now it means that it must have been so, if it happens that you sold all the goods in your store, you will not be having a closing stock. But if you didn't sell all the goods in the store, then you'll be having a closing stock. Then we have cost of goods sold. Cost of goods sold is the cost price of the goods which were actually sold during an accounting period. The cost of goods which were actually sold during an accounting period is what we refer to as the cost of goods sold. Then we have another term which we refer to as sales. Now in sales, when you are having transactions stated as your workable question, you'll see sell or sold some goods for a certain amount. When you see sales or sold goods, you interpret it as sales when preparing your accounts, and we'll define sales to consist of credit and cash sales for a given period. It consists of both credit and cash sales during a given period. When you know your credit sales are sales made with an amount to be paid later, and then cash sales is sales made and payment by cash is made immediately after purchase, after sales. And then we have carriage inward. Carriage inwards. Now carriage inwards is defined as the transport fare paid for a trader to bring goods into a business. The transport fare paid for a trader to bring goods into the business is what we refer to as carriage inwards. It must be added to the purchases when preparing the account. It must be added to purchases. Now we have returns inwards. Returns inwards is also referred to as sales returns. Returns inwards are goods brought back by customer due to damages or other reasons like expiration and any fault made any fault discovered on the good can require a customer to return goods. So the amount must be deducted from sales. Why? Because it is a returned goods, so that you can arrive at your net sales or turnover. Then we have returns outwards. Returns outwards, or we call it purchases returns. Returns outwards, or we call it purchases returns. Now these are goods returned due to one problem or another. Now the value must be added, or rather must be deducted from purchases to arrive at net purchases. The value of returns outwards must be added to purchases, so it must be deducted from purchases to arrive at net purchases. The formula for these values is stated in this format. The first one we have is net sales, and we know that net sales simply means turnover. The rate of sales made during an accounting period is what we refer to as turnover, and is calculated as the net sales, or turnover is calculated as sales you subtract returns inward from sales will give you net sales or turnover. And then we also have net purchases. The calculation of net purchases is the addition of purchases added carriage inwards, and you subtract closing stock will give you net purchases. Purchases plus carriage inwards minus closing stock will give you net purchases. And then to calculate cost of goods available, you add opening stock plus purchases. It will give you cost of goods available. Opening stock plus net purchases will give you cost of goods available. And then the next calculation, which is cost of goods sold. Cost of goods sold. The calculation for cost of goods sold is opening stock plus purchases less closing stock. Opening stock plus purchases less closing stock will give you cost of goods sold. Another formula for cost of goods sold is cost of goods available subtract closing stock will give you cost of goods sold. That's another formula. Subtracting closing stock from cost of goods available will give you cost of goods sold. Then to calculate gross profit or gross loss, the calculation is subtracting cost of goods sold from net sales. If you subtract cost of goods sold from net sales, you will get gross profit or gross loss. Remember, a business can be making gross profit and at the same time they may be making a gross loss. Now, if the cost of goods sold is more than the net sales, it means they will be having a negative answer, which is interpreted as a loss for the business. But if the cost of goods sold is less than the net sales, deducting it will get a positive answer, and that simply interprets that business has made a gross profit. And then the next calculation is net profit. Net profit is subtracting expenses from gross profit. It will give you net profit. And now, what's our expenses? Our expenses are like the wages, the salaries, the electricity rate, transportation, and so on. advertisement rates, all rates, the expenses. In a total, they may be one, and it may be more than 3, 2, 4, 5 expenses in a particular account preparation. So you first of all total your expenses. The total expenses subtracted from your gross profit will give you your net profit. And then if it happens that your expenses is more than the gross profit, the business will be making a net loss. And if it happens that the expenses is less than your gross profit, so in subtraction you get a positive answer. It means the business has made a net profit. And then the next calculation is rate of turnover. Rate of turnover. To calculate rate of turnover, you divide cost of goods sold by average stock. Whatever you get will give you a rate of turnover. That is the number of times the business makes sale in an accounting period. Number of times the business have to make sales and restock the new stock of goods in the store for sales is what we call the rate of turnover. And then we calculate the average stock as adding up the opening stock plus closing stock and then dividing by 2, and that will give the solution, will give you the average stock. So far we've discussed about our final accounts under the topic trading profit and loss accounts. We have discussed the trading accounts, the profits and loss accounts, and then in our subsequent class we'll be considering the third classification, which is balance sheet, as an entire topic of its own with its accounts preparation. In class we'll discuss and we'll prepare the accounts for trading profits and loss accounts. Have a nice day.